Richard, you're now serving at the helm as the CEO of Binance, the world's largest and dominant crypto exchange.
Thank you.
Matthew, you're the co-founder and chairman of Bloq. You've been called a double OG, been around the block for a number of years. Since Anthony mentioned my suit, I'm obviously wearing orange for Bitcoin today. Today's a historic day for Bitcoin. It's the Bitcoin halving. So why don't we just start there and acknowledge kind of what's happening in the community. So are we like cutting our Bitcoin in half? What is the significance of the halving?
Yeah, the Bitcoin halving, happy halving. We're in this 4-year cycle that Bitcoin has, and it's a fascinating cycle. Everything in life has a cadence, whether it's your birthday or some anniversary. In the Bitcoin world, every 4 years, the supply of Bitcoin, the incentives to miners, get cut in half. As the network continues to grow and other fees come into play, the reward for mining goes down. And we're upon that moment here this weekend, in this very moment, which is pretty historic, being at historic highs. And so I think the attraction and understanding of a thing called the Bitcoin halving is now in more of the public consciousness. It's kind of interesting. People are talking about it, seeing all the ETFs go from 0 to 1. It's a pretty incredible moment.
Well, I think this halving is especially special because if you remember all the previous halving cycles, the last halving was really watched closely by crypto enthusiasts, crypto degens, so to say. But this halving is unique. It's watched by the global institutions, right? This time around, including on Wall Street. And that's what makes this halving very different from previous halving. We have seen all-time high in terms of Bitcoin prices, even way before the halving, which is something that we have not seen in past cycles. So in many sense, this cycle is very unique. When we are start of a bullish trend today, despite all the volatility that you see in the market. And hopefully that trend persists. And we see so many new exciting projects coming into play on the crypto front, but also on things like tokenization use cases. A lot more Web3 projects bring a lot more users, investors into the crypto space. So there's a general bullishness about this, right? So we are all very enthusiastic watching this halving.
Yeah, I think the other thing that's unique or different from this halving to previous halvings, and of course this is impacting the miners dramatically, is you now have all these public Bitcoin mining companies. And every halving, you see the mining industry completely transform. And so from the last one, we saw the public companies come on the scene, and the future of the mining industry is going to change dramatically from today. I think we'll see mergers and acquisitions. We're already seeing that, consolidations. And now that you have public institutions mining Bitcoin, and even sovereigns mining Bitcoin, it'll be interesting to see the changes we see from here.
And that's a great point. Talking about the volatility of Bitcoin to all these publicly traded miners, the miners have different capital structures, different requirements and how they source capital, whether it's public markets, private markets, and sometimes those go in favor of cycles and out of favor. And right now it's a very unique time because we're at these pricing levels. Their market caps, their ability to keep their cost structure in line, get access to new miners is every thing for a miner is getting pressure tested right now from the operational standpoint to the underlying asset.
Yeah, absolutely. Yeah, I mean, it really wasn't that long ago that most of the mining community was people just mining Bitcoin at home on their personal computers, where that's really not much of the case anymore. So Richard, since taking over as CEO, and congratulations on taking the role. You have a big job to fill. You're leading the charge at the largest crypto exchange in the world, and regulation and compliance has obviously been front and center for the company. What do you have to get right this year? What's your #1 priority?
I don't think I have one priority. I mean, firstly, thank you so much for that. I'm really honored and humbled by the shareholders and management backing me up for this role. But it's not a one-man show, right? I have a very talented, very strong team of professionals behind me, right, in terms of really supporting the growth of this very important franchise. And we continue to grow from strength to strength. In the last quarter alone, we have added 16 million new registered users, bring the total today to 188 million, close to 188 million users on our platform. We are seeing assets of close to 120 billion on the Binance platform, right? So we have seen net asset inflow of close to 9 billion. But those are just figures offhand.
Yeah.
I don't think there's one top priority. There are several, right? And I always say that if we get those things right, we'll be hugely successful. And it's very simple, right? So firstly, users. We are a very user-focused platform. We want to make sure that we offer the best products and services to our users on that front. And it's a consistency of action. I mean, the course of the last 6.5 years of Binance, we always make sure that user security, user protection, user safety come first. And users are hugely confident in what we do on that front as we continue to enhance our features to support users much better. Secondly, you mentioned regulation is extremely important. The direction of travel within the entire industry is one that's much more compliant, much more regulated compared to before, right? So if you look at, I first got into crypto around 2017, 2018, when I was CEO of Abu Dhabi Global Market. And we became one of the first regulators in the world to really start regulating this crypto space and pushing the global crypto agenda. At that point in time, it's extremely early, right? And you have very few regulators really looking into that. You have very few institutions, like what you see today. I mean, institutions then think that it's passing fad, you'll go away. But today, the landscape has changed so differently. So again, I'm looking forward, as part of my 3 commitments, looking forward to working with global regulatory agencies to uphold global standards on that front. And thirdly, we are still at a very early stage of the development in the crypto space. We have estimated, globally, 420 million users on that. So it's about 5% crypto adoption today. So we want to look forward to working very closely with global partners, local partners, to really embrace and support the development, crypto adoption, crypto deployment in the various areas, right? So if we can do those three things well, users, regulators, as well as our partners, right, we will be successful.
Yeah, absolutely.
Yeah, that's a great, I think, perspective on innovation and regulation and how to balance that in a pioneering industry. Think about 10 years ago, this was a very hard to explain industry to folks at the dinner table. And look where we've come to now. And it goes back to that old adage of innovation kind of outpaces regulatory frameworks typically, and then catches up and it gets figured out. In this case, with crypto, AI, and some of the intersections of multiple technologies, I think that pace is going to get faster. And there's two parts to that. One is regulators need to figure out constructs and principles in order to kind of get ahead of some of the stuff. And then innovators and builders have to be conscious of what's responsible and trying to almost self-govern as these markets go from 0 to 1. And this happened in every industry we know, whether it's railroads, internet. This is a classic kind of industrial organization dynamic where you have a bunch of innovators and then you get really big, and now we're like, okay, we're trillion-dollar networks and let's be responsible. Let's think about the responsible tech, responsible regulation, and all that is kind of happened in real time in an open source, kind of open way for a decade, and now it's trying to find its footing in the more traditional world.
Right, so as we're talking about more of the traditional conversations, I think 2024, I've called this will be the cardinal year for crypto, the year that we go mainstream. We saw the introduction of spot Bitcoin ETFs in the United States, which allows a whole new class of investors to come into the market. We're seeing record multi-billion-dollar inflows into Bitcoin today through Wall Street, which we have arrived. We're now, we are hand in hand with the institutions, with the traditional financial services industry. And one of the arguments for investing in Bitcoin in particular, but in the digital asset space, this is a non-correlated asset and can be a flight to safety. There's no, I think, doubt or question that there's a number of major changes happening around the world. There's a number of geopolitical events, a number of which we saw impacts to the markets over the weekend. Richard, how do you think about geopolitical events, the significance of them, and how that can impact the digital asset markets?
Well, I would think that the broader macro economy as well as geopolitical events will impact any asset class, right? So I don't think there's one single asset class. Impact, it could be negative or positive, right? So for example, gold, right? With all these geopolitical events, impacts gold in a positive sense, right? In terms of asset prices. Well, and there are many comparisons of Bitcoin to digital gold, right? So really it's a deflationary asset class. There's a fixed amount. I mean, if you look at 3 years ago versus now, you have the largest Wall Street firm, BlackRock, Fidelity, and the likes going on air to say that, look, this is a very important asset class going forward. It's compared to digital gold. It has many characteristics that's far superior in many sense to gold. It can be traded 24/7. There's no barriers of entry in any parts of the world. Over the weekend, where there's a bit of tension, and where all other traditional assets are closed for trading, crypto is the only one that's working through the weekend, right? So people can do different type of trading strategies on it, investment, trading, hedging, which makes it very powerful in that sense, right? So it will impact, but the long-term trend of that is bullish. But I just wanted to also touch on the other point that you mentioned about the introduction of ETF in the US, right? So if you look at the global agenda, I mentioned just now the direction of travel is very clear for crypto. You're going to get much more compliance. My hypothesis way back in 2017 when I got involved in crypto and why I was pushing for regulations in this sector then was that I always think that for mass adoption to take place in the crypto, in the blockchain industry, you need two dimensions. The first, you need clear regulations so that industry players know how to navigate that space, right? And bring about greater user protection. Second dimension, you need institutional embracement of this, right? And they bring in a lot more expertise in terms of product structuring, bring new liquidity, new user pool. And we are seeing these two dimensions at work now in 2024, which is why 2024 is a very important year, because we are starting to see all these important things at play. So, which is why from now on, the pace of adoption will be much faster over the course of the next 5 years compared to the last 5 years. It's not only the US approving it, you see Hong Kong announcing approval of Bitcoin as well as Ether, ETF on that front. I think you'll come through in other jurisdictions. And a lot of regulatory clarity coming through, including MiCA in Europe. I think all those are key positives for the industry.
Yeah, I couldn't agree more. And I think about how Wall Street considers Bitcoin, kind of like how some crypto people consider Bitcoin, meaning like the way you hold cash is kind of like in Bitcoin, right? That's in your mind the cash equivalent. And when will Wall Street start to think that way, where my exposure to Bitcoin is actually it's a treasury management function, or it's a portfolio allocation function that starts to really get into the kind of common thinking on Wall Street. And I remember like in 2015, I had this tweet where every firm on Wall Street has Bitcoin on their whiteboard. And it was probably true, but they just kind of are slow to adopt new tech, and especially when it's, the regulatory constructs aren't clear. Now that there's clear guidance on an ETF, we saw what has happened since the beginning of the year, and it's profound. And so, is the, investment better than Bitcoin, or investment better than Ethereum with the staking reward? Is that now the new measuring stick? Because you could just hold those assets. You don't have to do a single thing. Watch the rest of this room innovate, adopt, and kind of push this tech forward, and you're sitting on these two underlying assets that kind of grow like a weed. So that's another interesting dynamic for Wall Street to kind of get into their psyche. And then it's like, well, what's the third ETF? You know, and then the fifth and sixth, and then you have portfolio construction, and then all these other things that will start to create this Cambrian explosion for Wall Street, much like it's happened for the crypto folks last decade.
Right, I think you're absolutely right. We're just getting started, so spot Bitcoin ETFs are new. Well, at least in the United States, we've had spot in many other countries for a number of years, but that's bringing in a new level of institutional inflows, which is great. ETFs, spot ETH is kind of up next, and then you know, BlackRock has announced a partnership around tokenization, so real-world assets. Not a conversation that's new to either of you all, but I think there's new opportunities to really grow that in a material way. We're kind of talking a little bit about the jurisdictional conversation. So it's been a couple years since I've personally been back to Dubai. And I've been here a number of times with the crypto industry, particularly with a number of the US companies. And the UAE has changed, the crypto industry in the UAE has changed dramatically in just a couple of years. That's really my first observation being on the ground this week, is it's incredibly vibrant. There's a lot of opportunity to build companies of consequence here. And I think a big reason is because of the forward-leaning work that I think you started, Richard, but from the regulators to have regulatory frameworks to provide that clarity. What we hear from companies and investors over and over again is what businesses need in order to build is a clear rule of law and clear regulatory frameworks. Arguably, as an American, I can say I'm very disappointed in how the US has handled this space. It seems like we're fumbling and bumbling the ball in ways that can be very detrimental to our markets in the United States, and the dichotomy here is, it's deafening. So it's obviously the US is one of the largest markets, and there's a lot of interest for a lot of different companies to have access to the US markets. I think, Richard, you may think about that a little bit differently, but my main question is, so we look forward 5, 10, maybe 20 years on the horizon, where are the global crypto hubs going to be located? What is your prediction?
Well, it's a tough, I don't have a crystal ball, so I can't make those predictions, but I can just highlight some of the parameters, right, that will make a hub successful, for instance, right? So if you look at any regions, I mean, Binance do global deployment, so we're active in most of the regions globally. But if you look at where crypto adoption are the fastest, you have two parameters at play, right? So one, younger demographics. So every time you have a much younger demographics, the crypto adoption tends to be much faster because people are much more savvy in this space. If you look at research coming out, the young adults today hold more crypto than stocks, which is an interesting research, right? So if you look at various pieces on that front, because this represents the future. I think Matt just now mentioned AI, but there's an ABCD, so to say. So AI, blockchain, cloud, and data infrastructure, right? So this represents the industry of the future. So blockchain, crypto are extremely important. But the young people are holding much more crypto than stocks today, and that's telling. Right? The second dimension is where you see financial inclusion being lower, right? So if you look at much more developed jurisdiction, crypto adoption may be lower because most people are banked and maybe overbanked on that front. But in many parts of the world, there's underdeveloped where financial inclusion is only 10 to 20%, right? Those are challenging. You can't make payments, you can't do remittance at a very low cost. I mean, if you go through traditional banks and remittance houses, they charge you up to 10%, whereas crypto is just a tiny fraction of that. So many lives have transformed and benefited because of crypto. People are better off holding on to stablecoins in many of these jurisdictions, which go through, hyperinflationary situation, right? And you see the currency facing challenges. So I've seen that at play, and many of these countries will continue to do well from a crypto adoption standpoint. But from a crypto hub standpoint, I think the one that is embracing give clarities of rules and regulations, very, very similar to what you see in UAE and Dubai, right? And very welcoming of talent coming here to really base themselves here to develop new projects. It's a good place for people to meet, fundraising take place, etc. Those will be very important crypto hubs for the future. And I think Middle East and the UAE will be that, right? If you look at, you mentioned it, I mean, the last time around you came here versus this time around, it's so vibrant, this community now. Binance signed an MOU with Dubai Virtual Asset Regulatory Authority just towards the end of 2021. At that point in time, the framework is not even up yet, right? And we work very closely with VARA to come up with the framework. We've gotten the license in terms of minimal viable product. And you see the community. I mean, today, Token2049 has 10,000 registered participants, making it one of the largest crypto event globally. That just shows the dynamism of this. And I'm very confident that this place will become a very important global hub, serving not only the Middle East, North Africa, South Asia region, but beyond that, right? And you see hubs coming up in different parts of the world that embrace that. But in the crypto scene, you know, things develop very quickly. It depends on which new jurisdiction embrace it and really how they execute it going forward.
What jurisdictions, Matt, do you think are getting this right?
I think it's fascinating to look at the world and how crypto has evolved. In the earliest days, spent all my time in Asia because that's where the first adopters, builders, investors, building wallets, mining companies, exchanges, you name it. San Francisco 10 years ago was a flyover town. You would not stop there because there was nothing there to actually educate people maybe on what crypto is or whatever. But all the action was in Asia. And then some of the regulatory dynamics that changed that dimension, pushed it to the US. Now the US is in kind of a, I would say, not clear, not friendly posture to the industry. So what's interesting is geographies matter in the evolution of tech. And like sometimes it's different parts of the world at different junctures of this industry's maturation. And like right now, and for the longest time, Dubai, Abu Dhabi has been very kind of forward-leaning and thoughtful, engaging with the industry and being very the thought leader that you would want in your home country, you know, kind of a thing. And so when you take a step back and take a case study like Japan, Japan had, you know, regulators like, oh man, you know, Mt. Gox blew up. It was the biggest advantage they could have gotten to have a leg up in this industry. So what happened? Mt. Gox, one of the largest exchanges, blew up, went bankrupt, and regulators had to say, what's Bitcoin? What do we do with this thing? And gave them the advantage to say, you need to understand and educate ourselves about this. And so they had like very basic licensure rules, segregated accounts, some reporting and disclosures, very simple ways in which to kind of understand and harness this industry without stifling it. And so that's a great case study to think about. And now Japan is a very major market, and the space is going to continue to lever off of that. So that's fascinating. And then you think about like where innovators in this space go. And I've been in tech as Richard for a long time. And it's hard to see historically where somebody would be like, I'm going to start a cloud company and like move to Helsinki. Like that, you don't hear that very often. But in crypto, it's like, yeah, I'm going to move to Dubai. I am heading to Singapore with my family, and I'm starting X, Y, and Z. That is a very common theme. And so the opportunity in this space makes it so clear, which is pretty cool.
Yeah, I mean, a lot of my American friends are now here, which is unbelievable. And I think we're all like, I think I could live here. Like, things are really nice here. And as innovators, having the opportunity to build cool stuff, that's really what people want to do, and do it in a legally compliant way with a strong rule of law. I want to turn to a topic that's a little bit more serious. You mentioned, we've been talking about some of the geopolitical events. Binance is making inroads in a number of nations around the world where inflation is getting completely out of control. And I think at this point, we all are feeling the impacts of inflation. The cost of everything is rising, and just day to day, what it takes to live and survive takes more. And wages aren't necessarily keeping up, and the money printers keep printing, and digital assets have a lot to offer for people, normal people, just impacted by what's happening around the world. Binance currently has an employee, Tigran, in Nigeria, who is being held, in my opinion, illegally, and in an extremely dangerous situation. Is there anything you'd like to say about this?
Well, as all of you appreciate, this is a sensitive matter, so I can't discuss too much about it. But what I can say is we are working very closely with the Nigerian authorities to try to resolve the matter. On Tigran, I just wanted to stress that Tigran is a professional of the highest order, a person of very high integrity. And for many of you in this space and beyond, you know that Tigran made his life mission, previously with US agency and then subsequently joining us as head of financial crime. He made it his life mission to really work with global law enforcement agencies to fight financial crimes, to fight illicit crimes, right? So our priority is to make sure that we bring him back safely as soon as possible, resolving all these issues. And we are supporting Tigran, his family, in this time of need, through all these challenges. And we are praying that he gets back as soon as possible on that front, right? So I think those are the things I want to leave you. Tigran's wife, Yuki, has started a petition on that front. You mentioned that. So, I mean, if you're interested, please go and have a look at that petition.
Yeah, I've shared the petition on my social account, so that is one thing the community can do to help bring Tigran home. And I think it is important that those who are working, who've dedicated their career to law enforcement, especially those who are now working in the private sector, who are dedicated to supporting law enforcement, clearly aren't the right people to go after. And it's absolutely essential that we bring him home immediately. As we're on the topic of inflation and geopolitical events, another piece of crypto innovation that's relevant to that is what's happening in stablecoins. Stablecoins are significant, a matter of significance. Stablecoins today are some of the biggest purchasers of bonds. We have a huge amount of digital asset transactions are done using stablecoins. To me, what's really interesting about stablecoins, at least the ones that have proliferated, because you do have a very wide degree of innovation, from algorithmic stablecoins to ones that are one-to-one back to fiat. What's kind of interesting with these US dollar one-to-one backed stablecoins is the way that they're collateralized. So when you take the banking industry and you take deposits, obviously these are rehypothecated. In the US, we've gotten rid of reserve ratios altogether. If there's a massive flight to stablecoins where these are one-to-one backed, this can have dramatic implications just for the banking system overall. Are you guys thinking about that? What are you seeing in terms of the market trends happening in stablecoins, and how important are stablecoins going to be to the larger digital asset markets in the long term?
Matt, I'm not quite sure. You want to take that first, or you want me to do it?
I'd love to hear your answer. I'm going to chime in as well.
Stablecoins are important conduit into crypto, right? So I think for people that have been involved in crypto for the longest time, all of you know the functions of stablecoins on that front. My view is that the regulators are getting involved quite a lot more. So you're going to see a lot more regulations coming into play for stablecoins. You have seen it in Europe now. So MiCA, with the stablecoins regulations coming into effect in July, and that gives a lot more clarity on what sort of stablecoins can be offered in the European Union. I've seen a lot of chatter. I've seen a lot of different discussion about the same being rolled out in places like the US and other jurisdictions, right? And all those would then prescribe the type of features that stablecoin will need to have, including some of the things that you mentioned, the backing, where is it properly custodized, etc. So my view is that you're going to get a lot more regulatory clarity on the stablecoin front, and with the aim for user protection.
Love the answer. And I was curious where you were going with this fractional reserve banking or fully
Well,
reserve.
it seems like it
'Cause
will
there
have
was
a huge impact.
It's kind of a competitive advantage to be able to do those types of things. But it's interesting the nature of stablecoins today and just the concentration in U.S. bonds is top 10 holder, right, in the world. It's pretty significant. And so governments are thinking about this. Builders in crypto are thinking about what's the next generation, what's another way to make a more resilient stablecoin that doesn't depeg when a bank or a regulator sneezes and keeps a stablecoin stable for the right reasons, not for the wrong reasons. And so I think some of those like dampeners and how those get balanced, maybe more algorithmically, maybe with different assets. I think the future of stablecoins is going to be very interesting how that evolves versus just the basic deposit a dollar, tokenize it, buy a bunch of bonds, and earn the interest, which is a great model. But I think that's going to evolve over time.
Yeah. That's all the time we have with Richard and Matt. Please join me in thanking our speakers.
Thank you.
Thank you. Good job. Good job.